What's up? What's up? What's up, my mind, your money business folks? It's me yet again with another. Damn, I left my water. I'm back. Welcome to another video of today's stock market news. Again, hopefully you guys are having a blessed day. As always, hopefully you're in the market and not trying to time the market, because it's impossible to time the market. You have to be in the market constantly. However you choose to invest, every week, every 2 weeks, once a month, it's up to you. You should be planting those seeds of investments as often as possible into good stock, good growth stocks, S&P 500, the overall stock market, ETFs, or if you want to take a chance and a risk, you can also invest into single stocks, right? But you have to plant those seeds of investments constantly. And like my stocks have done, they're growing. They've grown. I mean, here's the thing. This year, things have taken a little setback, not because of the companies itself, but because of the political climate and the tariffs issues that are currently happening. But for the most part, I have made 15%, 20% gains year after year on my portfolio. So let's get into today's stock market news. And it says the Dow extends longest win streak of 2025 as the S&P 500. NASDAQ climb after latest tariff relief. And I just mentioned tariffs, right? So let's get into the news. So U.S. stocks swung between positive and negative territory on Tuesday, but finished the trading day firmly in the green as investors fielded a rush of fresh earnings report and digested a much-needed tariff reprieve for automakers. So the S&P 500 and tech-heavy NASDAQ composite jumped about 0.6%, which is great, and 0.5% respectively, right? The Dow Jones Industrial Average climbed 0.8%, or just over 300 points, extending its longest win streak of 2025. So on Tuesday, President Trump signed an executive order to support automakers by preventing additional tariffs on foreign-made cars from being layered on top of existing tariffs already imposed by the administration. I think that's great. That's a good thing. If they're already paying tariffs, why lay more on top of them? Makes sense, right? So this means automakers paying Trump's auto tariffs on imports won't also be charged for other duties, saving the company some money, right? So the latest tariff update sparked optimism for a further dial down in trade tensions after Trump's upbeat tone on trade negotiations, particularly with China, helped stocks climb back from sharp intra-session losses on Monday. But Treasury Secretary Scott Bessent, again on Tuesday, put the onus on China, saying the tit-for-tat tariffs between the countries were not sustainable for China. Yeah, because you have to understand, we're buying everything from China because everything is made in China, right? So if we stop buying things from you, how does that help you as a country sustain its economy? We're basically in debt to China because everything is being made in China. So he also would not confirm whether Trump had spoken with Chinese President Xi Jinping. So meanwhile, Amazon came under fresh scrutiny from the White House after reports that it should show tariff price increases in product price tags. That's interesting, right? So the White House called the move a hostile and political act. Shares fell, but recovered after Amazon denied the plans. Good. So the stock closed just below the flat line. So earnings took the spotlight with a flood of releases Tuesday morning. General Motors delayed its earnings conference until Thursday, leaving room to reflect any White House tariff moves, while GM posted a first quarter earnings beat. The biggest of the big three U.S. automakers put its Ford 2025 guidance on hold as it grapples with the tariff fallout. So Spotify and Coca-Cola were among the closely watched companies reporting before the bell, with the focus on Trump's tariffs and whether companies are exposed or sheltered from their impact. So Starbucks stocks fell in its after-hours trade after the company missed second quarter earnings on both the top and bottom lines. Ouch. On the data front, consumer confidence declined for the fifth straight month, with the Conference Board Consumer Confidence Index for April coming in at 86, short of expectations and a significant drop from March's 92.9 reading. So job earnings also slid in March and are hovering near a more than 4-year low as the labor market continued to show signs of cooling off. Yeah, so job openings fall more than expected in March, hover near 4-year low. Wow. So it just says here, so new data from the Bureau of Labor Statistics showed 7.19 million jobs open at the end of March, a decrease from 7.48 million seen in February. So job openings in March hit their lowest level since September 2024 and were near levels not seen since December 2020. The data comes in as investors closely watch for any signs that economic growth may be slowing further. Interesting. So let's get into the stocks. What did the stocks do today? Bam, bam. So Nvidia earned 29 cents today. I'll take that. Closing out at $109.02. Broadcom lost $1.30 today, closing out at $191.17. Palantir gained $1.43 today, closing out at $116.08. My S&P 500 ETF, SPLG, gained 39 cents today, closing out at $65.19. Again, I would like to give a comparison of my S&P 500 to another popular S&P 500. They're both the same, right? But Vanguard's VOO gained $3.07, right? Which is great. But that same exact ETF, VOO, that's held by Vanguard is $509.49. My S&P 500 ETF is $65.19. They both contain the 500 largest companies within the U.S. But I would say Vanguard is more like a Nike, and SPLG is like Reebok. It's all about who you choose to invest with, but they're both the same. I just wanted to state that. So my information technology ETF, FTEC, gained 89 cents today, closing out at $163.13. I will take that. Tesla gained $6.15 today, closing out at $292.03. Not bad. Oh, and like my information technology ETF, FTEC, it closed out at $163, right? So Vanguard's information technology ETF is VGT. That's the sticker symbol. You can Google VGT, just like you can Google VOO, you can Google FTEC from Fidelity, and then SPLG. But either way, my information technology ETF closed out at $163.13. Vanguard's information technology ETF, VGT, it gained $2.64, but that ETF is $548.15. They're both the same. So I invest into FTEC, SPLG because they're on the cheaper side. It's not a bad thing. And so here's another example. So the year-to-date return for Vanguard's information technology ETF is a negative 12.16%, right? Because the market hasn't been doing that great. So the year-to-date return on my ETF is the exact same, just a little different, a negative 12.13%. See how they match up? So either way, mine's cheaper. And then also your money's more safer in mutual funds and ETF because it's being spread out amongst the companies within that ETF. Like the S&P 500 consists of the 500 largest companies. So you're not just investing in one single stock. You're investing into that package that contains all those companies. And it takes the gains and the losses and it averages it out throughout the whole ETF. And it gives you your gain or either your loss for the day. And also when you lose, say like for the S&P 500, you have like little small gains here and there, like 50 cents, $1. But what if you have thousands upon thousands upon thousands of these stocks? When you add up those 50 cents, those $1, those 25-cent gains every day, or days for month, that could be thousands of dollars. It could be 10 to 20% gains for the year on your total money that was invested. So if you invested, I don't know, let's say $50,000 into your S&P 500 ETF or mutual fund, and it gains, say, 20% for that year, that's $10,000, right? So just look at it that way. Either way, because my investment, 50% of my dollar cost averaging investment goes into my S&P 500 ETF, and 30% goes into my information technology ETF, and then 20% of my money goes into my individual stocks, which are a lot riskier. You never want to have all your eggs in one basket. So so that's all I wanted to say. As always, get out of debt, start living below your means, get rid of that car loan debt, that credit card debt, that student loan debt, that just debt, personal loan debt. Get out of it and start living below your means. Start dollar cost averaging into the stock market by budgeting. Budget for your groceries each month. Budget for all your monthly expenses, right? Start telling your money where to go instead of always wondering where it went at the end of the month or before the month ends. And you can do that by creating a budget. Start now. Start now if you're not doing it. It's never too late. As long as you have breath, it's never too late. So create that plan. That plan sets you up for success. If you don't make a plan, life will give you one, and you may not like what you're given because you have no control over it. So disclaimer, I'm not a financial advisor, nor am I pretending to be one. So any and all information on my channel is for entertainment purposes only. So please consult with a financial advisor before you invest any of your hard-earned money. Sorry, I'm gonna get out of here. You guys take care. Hopefully you're having a blessed day, blessed week. Create that plan, start planting those seeds, and you keep watering these seeds by paying attention to what you're investing into, what you're planting, and you should come out with a nice harvest, right? But first you have to start planting the seeds. All right, so you guys take care. Peace.